Welcome to another episode of Canopy Practice Success. I am your host, Casey Brothers, and I'm here today with Dave Spence. And Dave has a rather unique background, especially relative to a lot of our podcast guests. Dave is a CPA. He spent 6 years in public accounting, but then spent a lot of time in wealth management, 18 years with AXA Advisors, 15 years with LPL Financial. And Dave has some fun things we're going to talk about today relative to connecting the dots between wealth management and tax planning, which I think also has some fun CAS implications, but we'll get into it. Dave, anything else you want to offer? Fun hobbies, cute grandkids?
Well, I'm a diehard Steeler fan and a fan of Ohio State. I've got a couple of grandkids, 3 kids of my own and two grandkids, and I adore them as always, as every grandparent does.
It's always a good reminder to hear that my mother-in-law and mother do actually, in fact, adore my children. I have to say, okay, it's okay if I need to ask for help.
It comes in handy.
You, again, have an interesting background. You haven't spent a ton of time in a typical accounting firm the way a lot of our guests have. Lately, I have noticed there's been some whisperings of this connection between wealth management and a typical CPA track. In fact, I was just in Boston last week and met a guy who is a wealth manager, flew down from New York to our event in Boston because he wants to expand into CPA services. And I was very surprised because I don't hear it often. Why don't we hear this often, Dave?
Well, the CPA work is very difficult, very challenging. The CPA work is more science than art, if you will.
Okay.
There
Yeah.
should be one right answer to every question. It's based on law, and so it's very kind of scientific and single focused. Wealth management and financial planning. I like to use the term financial planning more than wealth management because it kind of covers a lot more than just managing assets. They can be more artistic, if you will, art and science.
I love
And
that.
there's several ways that you can skin the cat. You can save up for college in a 529 plan. You could do it in an insurance policy. You could do it with loans, any which way. There's a number of ways that you can get there. And you have to balance, one goal against another goal and prioritize. And there's just a lot more artistic aspects to that. And to go from that level into the the science, if you will, of taxes, it seems really unusual, and I can see where that would be really challenging. I found it easier, but still difficult to do the reverse. Become an expert on taxes and accounting issues and financial statements and things like that, and then take it to, okay, what do we do with this information? How's that going to, where can we see ourselves in 10 years, 20 years, 30 years? And what kind of things can we do along the way? And you learn about all the different options and so forth. It was exciting to me to open up the different possibilities and to see how each different person would see things differently and choose different routes. And I could help them along the way with that.
Yeah. Well, it's not uncommon that I do stumble across firms who are doing tax planning. That's a
hmm
very clear, I guess, not a big logical leap. We're not connecting too many dots there. Do you see that it's really not that big of a leap from tax planning to financial planning, or is it bigger than maybe people anticipate? Or how might you recommend people make that jump and why?
Well, I think where the industry is right now, and I've always been active in the CPA world. I'm past president of the Virginia Society of CPAs, largest chapter right outside of DC. And I've taught literally more than 1,000 CPAs on financial planning topics and so forth. So I'm very active and I follow the industry well. And basically, the biggest step is to get into the tax planning from tax prep. And that's where I think the industry mostly is focused right now. Some are doing tax planning and they might want to take it to the third level, which is adding financial planning and doing all the number crunching that goes out decades and all that stuff. But more of them, I think, are leaning in toward how do I get involved in tax planning? Now, when you move from tax planning to financial planning, it's very smooth, I think, because the biggest hurdle that we face in our own financial independence is the taxes.
Mm.
You can pay a little bit too much in management fees or administrative expenses or charges in a product, but that's nothing compared to a 40% bite on the earnings that the tax code can take away from you. So I found that having that CPA background and that tax understanding made everything easier for me as we went forward. And I focused a lot on the tax aspects of every financial planning move.
As I see things, and I've spoken to lots of CAS professionals, and it's funny, there are different levels or different interpretations, or you're on your journey to becoming comfortable advising,
Right.
which really is that the mentality you're in as a financial advisor, as a wealth management and professional. I loved your designation of science versus art. I think that maybe takes away, for me at least, potential opportunities to feel major imposter syndrome. That
Uh-huh.
it's there's just this creative aspect to it. You've got the foundational and understanding. There isn't necessarily one right way or one wrong way. And yeah, you'll still learn as you're advising clients and find new creative ways, new executions within
Uh-huh.
the profession. But with CAS firms, again, there are different levels as people are maturing or entering into, or maybe even levels of confidence and getting to that advisory. And I love this connection because taxes are so mythical, I think, to especially non-professionals. And then to your point about looking ahead 10, 20, 30 years, I can't do that as an individual.
Uh-huh.
I can barely wrap my brain around what to do right now. And in fact, I remember I had a few things personally that I was like, okay, as soon as these things are taken care of, I'm going to get a wealth manager. And I did. And the instant I did, he laid out his models and said, hey, here's what your financial situation, your future financial situation would look like, status quo without me investing for you. And then he showed us the model afterwards. And instantly, all of my future anxiety about our financial situation was taken away. I'm like, oh, we're actually doing better than I thought. And it was just such a relief. I'm no complex client. I don't have businesses and real estate properties. But I think if that were ever to be the case, like all of these things become strategies I would want to take advantage of. Is it common that these types of clients also are like, but you're my accountant, can't you just do it? Or is it just so common that these are so separate?
No, it's very common. I think the public in general is a little bit misled as to how much they're getting from their CPA or their EA and how much they're getting from their investment advisors. For example, I talk a lot about the national debt being
Mm.
so high right now relative to the gross domestic product, which is how they measure it to see if it's out of whack or not. It's at about 130% of GDP. And the target over time is between 40 and 70. And we're at 130. The last time we were over 100 was right at the end of World War II, where it was at 120%. And between 1945, I mean, immediately they raised the tax rates back then to start paying down the debt. From 1945 all the way to 1985, tax rates were 50 to 100% higher than what we're looking at today, even adjusting for income, inflation, and all that stuff. My father was a steel mill worker. He was in a higher tax bracket than I am today. It's crazy that that's what they had to do. And now we're in the same bucket and we're not raising rates, we're lowering them. We're extending these cuts and so forth. And we're printing money like crazy. Our debt is at $37 trillion. That's like a credit card that we only pay the interest on it. We never pay the principal. So it's just going up. It goes up at the pace of about $1 million every 40 seconds. And we just keep refinancing the debt. And as interest rates go up, we refinance treasuries that are paying 1.5%, 2%. Now we're refinancing them at 3 and 4 and 5%. It's going in opposite directions. Our income and our expenses are going in opposite directions, and we're not doing anything about it because they won't get reelected if they say they're going to raise tax rates or they say they're going to cut entitlements. 95 cents or so out of every dollar raised goes to 4 expenses out of the budget. That's Social Security is first, Medicare, Medicaid is second. Interest on the debt is now the third largest, and that doesn't get us anything. It's just paying the interest on previous spending. And then the defense budget. So you tell me where we're going to cut all of our expenses and balance the budget without raising taxes. I preach to people that, taxes are your biggest financial planning challenge. And the tax professionals need to be doing more planning. So let's get busy and let's start doing this. And let's collaborate. Hook yourself up with a wealth manager, hook yourself up with an insurance expert, and then you do the best thing for your client. And you basically sit on the same side of the table as your client, and you're protecting them. And would they love that or not? Of course they would. You can ask tougher questions than they can ask. And you can grill the advisors, and you can make sure the plan makes sense, and you can kick the tires on it, and you can run it by other experts if necessary, legal experts and so forth. The collaboration is important, and you got to find somebody you can trust.
As you were talking about that collaboration, I've had three modes of execution. It's either the accountant gets certified and they add that additional expertise to their bucket of expertise. They hire someone on staff, or they refer out. They have a partner and then have some sort of referral rate bonus payment, right? Are you a fan of any? Is there a fourth that I'm missing? What are your thoughts on structuring that logistically with the firm?
Well, you described pretty well the three options, and they've almost always gone with the third. They will
Mm.
refer people away. And we were taught in CPA school, basically from then on and through the profession over the years, refer people and refer them to like three different people. You want to be independent. You want to be objective. You don't want to be on the hook for somebody giving them bad advice.
Mm.
And that all makes great sense because I've been on the financial services side of the business for 35 years as a CFP. There's 90% of them are bad. 90% of the financial advisors out there, I would say, are bad. When I say bad, they might mean well, but they're just selling limited products. They have limited knowledge. So it's really hard. And I don't blame people for kind of running from that and keeping an arm's length. So they refer people to other advisors. And, if you have dinner with them and, get tickets or something like that, you might send more business. Everybody plays that game. I think you should work as a team. You should be the quarterback because the taxes are the biggest issue. The business itself, if you're dealing with business owners, produces a lot of opportunities for planning. So you should be working with the team and you should be the quarterback rather than referring them away and keeping your distance. I think you need to get involved and help manage, and your clients are going to love that and they're going to get the best work. And you're going to see when somebody doesn't know what they're talking about. So you're going to make sure that the best stuff happens. If you want to pursue a CFP after that, like I did, that's fine. If you want to hire people in to do the asset management, that's fine. But you need somebody that knows all the bases. And, a lot of the investment advice out there, the wealth management, is focused only on the assets under management and not any insurance stuff. They say we don't touch insurance with a 10-foot pole. That's not the best thing for your client. There are guarantees that you can get for your clients that only insurance companies can provide. You can get protection against market losses. You can get death benefit guarantees and long-term care benefit guarantees and all that stuff that an asset manager is never going to be able to provide you. So you want to be open to that and collaborate with a bunch of people. And you'll learn a lot of great stuff along the way, too, that'll help you and help others. And your clients are going to love it and they'll pay for it.
I couldn't agree more with that last statement in particular, because I think, and you tell me with your years of experience, but I think this is in general customer behavior. Customers often don't always know exactly what they want. They know what they know and they don't know what they don't know.
Right.
And no matter the industry, no matter the service, no matter the product, there is a level of education that you need to do, called marketing, pretty much.
It
Or even a
is.
sales call, right? Like painting the picture, connecting the dots. And a big theme for me lately in accounting has just been with the entrance of AI. And even a year and a half ago when 3.0 came out, one of the first use cases was on a tax return, and it did a basic tax return pretty well. It's just going to get better. And math is math, and we can probably see, GAAP principles executed on with a high amount of accuracy as the coming months and year or years, come up. And that pushes us into this big opportunity of advisory, because AI cannot do two big things: critically think and build relationships. And as you're talking about this, especially as you called out the referring away, I get your point too, and your observation of why professionals don't want to be beholden to risk that might come with the financial advisory aspect to this. But that relationship is so crucial, so advantageous. Like you already have it. And if you're providing them with a great experience already, I guess I should say you've sold me. I'm no CPA. I can't go and execute on this tomorrow. With all of the trends and movement I'm seeing in the market, picking up what you're laying down with the opportunity here of stepping into financial advisory.
And it was a rude awakening when I did it. I had, 6 years, I was charging people by the 15-minute block, right?
Uh,
Nobody wants to do that, but they listened to everything I said, and
yeah.
I got to believe in everything I said. No, I mean, you could get the answers. I could turn to my partner in charge and the managers. When I left all of that and I pursued the CFP and I got onto the product side of the business, because back then you couldn't do any product stuff as a CPA. So,
When
I
you say
jumped.
product stuff, what do you mean?
That means I could sell an insurance policy, or I could
Mm,
put somebody into an investment account and I could manage the assets. I got all the licenses for that. I got all the training for that. I got all the credentials, and people still wouldn't trust me
mm,
because I was paid differently now. I had to work with that, and I had to convince myself that I'm helping them first and foremost. And if I do that, then it's a win-win situation. And I had to sharpen my communication skills and make them understand and trust me that this is the best thing for them. It's not the only thing. Give them
yes.
options and all of that stuff. I was helping people, and then it became easier to maintain the relationship, to dig deeper and find out what they think is fast or slow or big or small or aggressive or conservative. Everybody's a little bit different, and you get comfortable with feeling them out at some point, and then you just want to do more of it. And it's very exciting because this is the stuff that AI is never going to replace.
Oh, yeah.
You need to get in there and understand them and then do the right thing for them.
When you talk to about what clients want, like, I have this requirement of my financial situation is beyond my ability, right? I
Hmm.
need you to file my taxes. I need you to do my books. I need you to run my payroll. They'll hit a threshold that is the catalyst for having them reach out to an accountant. And again, like what I said with it's not uncommon that customers in general don't know what they don't know and therefore don't know what they could or should want or what is available to them. I love that you hit on communication. This has been a theme recently for me that I've really kind of latched onto with advisory and again, this insertion of AI in accounting and what it might do to impact accountants' work. One of the biggest things and challenges it's going to do for accountants is force them to learn how to communicate better, to manage a relationship better, to elevate beyond numbers. Once you master that skill, I really don't think, I mean, and here I am, I'm like spectator commenting on the professional players on the court here. I don't think
Right.
it's that hard to make a three-pointer from half court, but I don't think it's that much bigger of a leap once you've mastered that communication aspect of and that you're getting into the arena of selling, of
Hmm.
communicating value, of distilling things down simply into a language that they understand and not the language that you want, that you default to using. And
Right.
that I think is like the biggest, your next
Hurdle.
bit
Yeah.
of, yeah, biggest hurdle. And then your next lowest hanging fruit is,
Hmm. Yeah. I agree. Though I became a really good salesman, actually, but I
yeah,
never felt like I was selling. My job was to teach. You
yes,
know, I could go out and I could study all these strategies and rules and products, and I could see what was good and what was bad. And I could go and talk to a client and in, 20 or 30 minutes get to know them and say, okay, I've got a shelf over here with 300 things on it. I'm going to go pull off three of them and we're going to talk about it
yeah.
because of their situation. And I think anybody can do that. If your heart is in doing the right thing and just gathering the right information and putting the pieces of the puzzle together with the help of, whoever you're collaborating with, working with somebody that's good, then it's going to be a win-win-win-win situation. The products that are the best are going to win. The advisors that are handling the products are going to win, the client's going to win, and you're going to win. So and there's nothing better than that.
I love that you said that you got really good at sales and then even said the word teaching in there. People, myself included, there is something about sales that is scary. And I think a big part of that is if you misinterpret sales as being about you. And I do want to
Right.
bring, I know you, in our pre-call, you mentioned that you're retiring your wealth management website and moving to another website. But I do want to point listeners to Dave's wealth management website because he's done a few things that capture that spirit. First, you are the sole proprietor of Palladium Wealth Management, but your website doesn't read that way. It reads as a we, as our mission, what we can do for you. And I wanted to call that out because, again, it makes it easier to sell an outcome, to sell a value and not you. And I think that gets us away from those 15-minute increments too. You're not selling
Hmm.
your time, you're selling the output that you are delivering. And then I also love, and I'd love to even hear maybe the evolution you had with this, but your services tab, everybody, these are Dave's services, and I love it so much. Clarity, security, prosperity, and legacy. That just makes the marketer in me so gleeful. Like, this, it's clear what you are selling. I
Yeah.
might not know the expertise that you have and the things you're doing on the background and the softwares you're logging into and the numbers you're logging, but I know your aim is to provide me with clarity, purity, prosperity, legacy. I
Yeah.
thought it was brilliant.
Thank you. Thank you. Yeah, and I actually came up with those myself. I didn't want to be like everybody else. I wanted, and I've had different players on my firm, and it grows and it ebbs and flows. As a team, we want to put those needs and those wants and those concerns of clients ahead of everything else. And that's part of the art versus the science.
Mhm.
It's the real desire to want to help. And I think almost every tax professional I know really has that feeling inside them that they want to do what's right. They want to do what's best for the client. They want to protect them whenever they can. But they're afraid to sell. They're afraid to be perceived as selling something. And I get that, but what's the result if you do nothing? Then they
Yeah.
go out into that jungle and they get one of the 90% that's going to oversell them or undersell them and not understand the stuff that they need to understand. So you really don't have the choice. And AI and fee issues and the tax law changes and all that stuff is breathing down our necks, their necks. I don't do the tax work anymore, but yeah, I mean, they hate life when it comes to tax season and all that. So the ones that are happy are the ones that are getting out of the 9 to 5 and,
Yeah.
60-hour weeks for 3 months out of the year and that kind of stuff. So again, I come back to the win-win.
Yeah. And the tax planning, to your point about seasonality, is just a really great way to level out that seasonality, to maintain touch points with your
Right.
customers, especially if they're clients that are just tax clients. To that point, actually, this could be a really good tax planning specifically, can be a really good next step into trying to move into a subscription type pricing model, just because it very naturally, organically adds another touch point that isn't based on tax deadlines. And then that tax planning again can get us more into this financial planning like you're talking about. I do want to, we've covered a lot. And to your point, like there's also additional certifications, whether an accountant chooses to do that themselves, hire someone else or whatever. You have written a book called The Tax Pro's Guide to Using LERPs for Advanced Tax Planning. We didn't even get to talk about those specific levers to pull, but you have, again, written this book that is a resource to accountants as they're exploring this as an option of pivoting or adding a more robust set of services to their clients.
Right. I'm associated with David McKnight's Power of Zero Advisors, and he kind of wrote the book on LERPs, life insurance retirement plans. And basically, it's overfunding a life insurance policy. And it's something that's been around a long time, and people justifiably critique it as not making sense in a lot of cases. I'll tell you briefly why that is. But if you're thinking about the tax mess that we're going to be in, we're looking at the lowest tax rates we'll see for the rest of our lives. David M. Walker, the former Controller General of the United States, wrote an endorsement for my book, and he said, Dave's right. These are the lowest tax rates we're ever going to see. Now, if that's the case, then we should be talking to our clients about doing Roth conversions, lining up tax-free income sources in the future. And for your affluent clients that can't really do much more in the Roth venue, and they've already done everything they can, then they should be looking at these LERPs. Now, LERPs will fail because they're oversold by people that are trying to get the sale, right? The insurance companies take on a big liability when they write a policy, right? They get a $10,000 premium and they have to guarantee $100 million death benefit, right? We want our clients to put in 50,000 or 100,000 into that product with the $1 million benefit and then start making money on the cash value and pull it out tax free later on like a Roth. So that's what the whole idea with the LERP is. Fortunately, to sell enough LERPs and cover their expenses and build up their reserves that are required under state laws, they have to have a lot of front end expenses. And the insurance commissions that they pay are big in the first year and they're tiny or not at all after that. And there's an incentive lost right there for that policy to be serviced properly. And if you get past the first 10 years where those expenses are higher because of the economics of insurance, then in the next 10 years and 20 years, that thing's going to outperform other assets like a Roth IRA. It can outperform a Roth IRA because its expenses are going down in the later years, where if your advisor is making 1%, those expenses are going up in the later years. So I try to teach people that if you understand the mechanics and the values that that life insurance policy can bring to the table, you would want to do both that and a Roth for people
Mm.
that have enough money to do both. So that's what I wrote the book about, is to help people get past the myths. And there's several myths. And myths include, you're going to be in a lower tax bracket when you retire. That's gone. And your investment advisor's taking care of all that. And he's probably going to tell you if you should be doing Roth conversions. That's not true either. Is he going to tell you to do a $100,000 Roth conversion and pay $40,000 in taxes? No, he wants to manage that 40,000, right? His income's going to go down if he tells you to do something like that. And they always say, I don't understand the insurance, but I know it's a raw deal, you know, and it's not. I think tax professionals need to understand it's a good deal in the right circumstances. And your people think their tax advisors are giving them all the tax planning that they need. That's not true. We're not telling all of our clients to use that 22 and 24% tax bracket. Do the Roth conversions. Think about a LERP because you have extra money to work with. And that LERP can prevent losses. If you use the right product in a bad market, you get a 0% return, where the Roth just took a big hit. And you got two places that are protecting each other. You got tax diversification. If they change the laws down the road, which they'll have to do, where are they going to go to get the money? They're going to say, we got trillions of dollars sitting over here in Roth accounts. Let's pass some laws and tell them we meant well, or my predecessors meant well, but we can't afford this. We're going to have to throw half your Roth distributions on your tax return, just like you do with Social Security, which started out tax-free in the beginning. All of this stuff is what I'm telling tax professionals to do. And I have subscriptions that they can come along with me. I can coach them at whatever level they're at. I can take them to the next level. I can hook them up with the right advisors so they know they're getting somebody good. That's where I am, and that's where my heart is.
Awesome. Well, Dave, thanks for giving a quick summary of the book. If your interest is piqued, we'll put a link to the book in the show notes, as well as a link to Dave's website where you can reach out and contact him. Dave, thank you so much.
Okay, see, thank you.